Taxpayers, in the haste of preparing their tax return, trying to meet the deadline, will overlook simple deductions, mainly on their Schedule A, charitable contributions, safety deposit box fees, investment fees, simple publications, professional journals.
Experienced tax pros know where to look for deductions, subtractions from your income that can save hundreds, even thousands in taxes. Thanks to the new tax law, everyone is now going to get a much larger standard deduction. $12,000 if you're single, $24,000 if you file a joint return. Estimates are that 90% of Americans won't have to itemize this year because of those big standard deductions. But if you're one of the few, here are a few deductions often overlooked. Number one, charity. You know you can deduct your contributions, but if you volunteer, you can also deduct 14 cents a mile for transportation to and from that charity and the cost of any supplies you use in that charitable work. Number two, state sales taxes. Now, the total of sales income and property taxes is now capped at $10,000, but this potential break is still there. This one's best for those without state income tax. Then there's the dependent care credit, not the same as the child tax credit. This one can apply to adult dependent care. Restrictions do apply, but it's worth checking out. Now, if you're in the low to moderate income, you might be able to get a tax credit for retirement account contributions. Do a search for Retirement Savings Contribution Credit and see if it applies to you. Bottom line, if you've got more than $12,000 of deductions if you're single, $24,000 if you're joint, you're still going to be an itemizer. So get everything you've got coming to you. And if you need any help, go to MoneyTalksNews.com and do a search for Tax Hacks 2019. For Money Talks News, I'm Stacy Johnson.